The Bitcoin blockchain was created in 2009. Cryptocurrency is a new asset class that began with that. Because Bitcoin and other cryptocurrencies that use blockchain technology do not have a single owner, they do not have a central authority, payment processor, or company owner. Instead, crypto networks are peer-to-peer, which means that people can trade directly with one another. Many of the additional advantages of cryptocurrency stem from their decentralized and peer-to-peer nature, which makes them even better. This video will demonstrate some positive aspects of cryptocurrency. The advantages of crypto in 2022. 1. Simple transactions. Crypto transactions can be completed quickly, cheaply, and in a more private manner than most other transactions, but they can also be difficult to track down and trace. It makes no difference if you use a smartphone app, a hardware wallet, or an exchange wallet. With these tools, you can send and receive a wide variety of cryptocurrencies. Bitcoin and Ethereum can be purchased with cash at a Bitcoin ATM. It is not always necessary to have a bank account in order to use cryptocurrency. Someone could buy Bitcoin with cash at an ATM and then send the coins to their phone. Some people do not have access to the traditional financial system, and this could be one of the most beneficial aspects of cryptocurrency for them. 2. Exceptional security. Decentralized cryptocurrencies are usually safe ways to pay because they are based on cryptography and the security of the blockchain. There's a good chance this will happen. In cryptography, the hash rate is an important factor in determining how secure it is. More computing power is required to break into a network with a high hash rate. In terms of security, Bitcoin has a higher hash rate than any other cryptocurrency, making it the most secure one available. In other words, using a crypto exchange is only as safe as the crypto exchange itself. Most of the time, crypto is hacked, exchanges are hacked, or people make mistakes. 3. Short settlement times and low fees. While some people only want to invest in cryptocurrency in order for the price to rise, others may benefit from the fact that they can use it to exchange money. Transactions in Bitcoin and Ether can range from a few cents to a few dollars or even more. People can send other types of cryptocurrency for pennies or less. This includes Litecoin, XRP, and other coins. Typically, the money is paid out in seconds or minutes. Bank wire transfers can be much more expensive and take a long time to complete. 4. Exponential industry growth. This is one of the fastest growing markets that most of us have witnessed in our lives. Cryptocurrency is one of them. It's possible that being involved now is akin to being involved with companies that were on the cutting edge of the internet in the 1990s and early 2000s. At the end of 2013, the market for digital currencies was worth about $1.6 billion. When it reached $1.4 trillion in June 2021, it had risen to more than $1.4 trillion. 5. Outsized returns. People are aware that Bitcoin has been the best performing asset over the last 12 years, but it is not widely known. The first Bitcoins were created in 2009. They had no value at the time. In the following years, it would rise to a fraction of a penny, then to tens of thousands. This is a substantial increase in percentage points. When it comes to stocks, the S&P 500 index returns about 8% per year on average. In the past, some altcoins have outperformed Bitcoin by a wide margin. Many of those later saw their prices fall. This is one of the most well-known aspects of cryptocurrency. Gains like this one may be the most talked about. The losses, on the other hand, may be one of the most well-known disadvantages of this. Volatility has been a big part of the crypto market, which has been great for day traders and people who want to try new things. 6. More private transactions. Some people believe that cryptocurrency is more private than it is, but this is not always the case. Blockchains create an immutable public record of all transactions. Even though this ledger only shows wallet addresses, if an observer can link a user's identity to a specific account number, they can see how their money moves. It's important to note that the vast majority of crypto transactions are fictitious. There are ways to make them even less real. Putting transactions together in such a way that they are difficult to distinguish from one another can confuse people who are unfamiliar with them. There are also some issues with people who run full nodes. People who run full nodes can't always tell if the transactions that pass through their node were sent by them or by someone else. Methods like these are for people who already know a lot about crypto, but they may be difficult for those who don't. This means that, while crypto isn't completely private, transactions are still more private than when using fiat money with third-party payment processors. 7. Portfolio diversification. Cryptocurrency has come to be known as an asset class that does not fluctuate in value with the price of other commodities. Crypto markets aren't usually linked to other markets, and their price movements are usually driven by factors that aren't the same as those that affect stocks, bonds, and commodities. Many crypto coins have risen by millions of percentage points over the last 12 years. This means they are not linked to anything else. In recent years, cryptos have briefly traded alongside stocks. Don't forget to subscribe to our channel.